A very good morning to you. Thank you so much for keeping it Y254. Karibu sana to another edition of Hello Day. My name is Shiko Kaitani, taking over from Kalami Val Hilda Wadidi, and of course in absentia, Mr. Barry Moses. That SMS number is 22162. If you would like to engage with us this morning, please begin your text message with YM254 and let us know where you are watching us from. Of course, we sure hope that you have enjoyed the show so far. The youth and politics was definitely on fire with Hilda Wadidi. Continue to interact with us even on our social media platforms. If you're not too sure, well, they are YM254 on both on Instagram as well as Facebook, as well as Y254 TV on Twitter. Now, that being said, as always on Mondays, we like to deal with current affairs, and for the past couple of days we've actually been talking about taxation. And you know, now that the tax filing season is here with us, you know, as young people, we have been branded as not taking, you know, our taxes seriously or even filing them. And so we're trying to change the narrative and even understand the process. And if you're not too sure about how to go about this, well, not to worry, because we do have help in studio, and of course to even help us understand the importance of actually filing those returns and even simply just paying our taxes. So I would like to welcome yet again to studio Judith Njagi. She was here last week. She is a project manager from Kenya Revenue Authority, and today she's not alone. She is joined by Yvonne Tago, who is in the policy division of KRA. So welcome, ladies.
Thank you.
Judith, you're not a stranger, so for you this is home now.
Yeah. I'm happy to be here.
You're happy to be here.
Yes.
And Karibu sana yet again, Yvonne.
Thank you.
Okay, so we're going to be having two students later on, Stephen Ayaka and Raila Opanyi, who are from the University of Nairobi and Mount Kenya University respectively, to even just throw questions to, can I say, our experts from KRA concerning taxation and of course whether or not we are compliant and all that. Okay, so ladies, as a recap, Judith, we got so much feedback concerning filing our returns, yeah? And so before we get into more issues concerning policy, which Yvonne will address, as well as the questions, because this is not even really my show. This is purely going to be our students' show, throwing the questions at you towards the end of this particular segment, yeah? But tell us again, as a recap, about the deadlines. And, you know, there's that confusion about what happens in the month of April and what happens in the month of June yet again.
Thank you very much, Shiko, for that. Yeah, we brought out a clarification that taxes, for example, now we are talking of the year 2017, and we said that the tax should be paid all the way up to the 4th month following the accounting period. And we brought out a difference between individuals and corporates. Individuals' year of income is January to December, whereas that of the corporates, it depends on, they're the ones who decide when their year will end. But when it comes to filing, for example, the individuals, January to December, we give some good period to do reconciliations, the books and all that. That is in case someone is in business. And by the 4th month, which is usually now April, for December cases, we should find or get the money paid, any tax paid. And we call that balance of tax, because it's expected that any person, an individual who is in business and has a tax to pay which is above 40,000 Kenya shillings, they should pay that tax in installments. So the installments are within the year, the accounting period year. Then the balance of tax comes by 30th April. So that is one thing that we know about April, is payment of the balance of tax. Then come 30th June, that's when the returns should come. So we are talking of returns of tax that has already been paid. So we are telling the commissioner, this is my income, these are my expenses, this is my profit, and this is how I have calculated the tax payable, which I've already paid. And of course the payment, we can see it in our system. So that's the difference. And again, for those who are purely in employment, that may not really count, because as soon as you have received your P9, which can be as early as January, February, we expect you to start filing your return. So actually the filing season starts in January all the way to
June.
30th June.
Okay.
Yeah.
All right. So the deadline is almost up. But Yvonne, I'm going to throw this question at you because I believe a lot of people, especially young people, also, you know, fine. Yes, we tend to feel that I can get away with it, and it's not that big of a, you know, of a deal if I'm actually not filing my returns or even just paying my taxes. What do you have to say in regards to that, and what are some of the consequences as we recap on what could happen if I'm just not making this a priority?
I think the future lies with the young people, and the young people are the ones to take the lead in compliance issues. And so we have, if you're earning an employment income from January to December, let's take the year 2017, you have between January to June, 30th of June 2018 to file a return. And if your employer has given you the P9 form, then we expect young people to lead from the front and file their returns early. And this time, and over the last couple of years, filing of returns has been made very simple, and you can do it from the comfort of your home or your office on iTax. And then to your second question about the consequences of non-compliance. The law now, there's Section 83 of the Tax Procedure Act, imposes a penalty of 20,000 shillings for failure to file return. And I think it's something which can be avoided. You don't have to pay 20,000 for not filing a return, while yet you have quite a long duration.
20,000.
Yes. So
that's a lot.
It's good to be compliant. And sometimes when you need like a tax compliance certificate, we look at your history as well. We look at your history with filing returns. And that's the basis on which the tax compliance certificate is issued. So when you need to come to KRA for a compliance certificate, we also look at your history. So it's good to be in books.
One of the top questions that we actually got, Judith, was actually on the informal sector. There was a lot of interest on that. And, you know, there's the general perception that, by the way, if I am in the informal sector, me niko kazi ya jua kali or whatever, you know, you're just hustling, that you genuinely don't have to pay taxes. But it turns out that there is something that actually addresses individuals who are working in the informal sector. Maybe you can highlight that again.
Yeah, that is true, Shiko. Everybody has to contribute to this the taxation or the tax, because we are all building Kenya together. We all enjoy the services that we get. So as I said last week, we have a tax that we call turnover tax, which is actually for the informal sector, which I said is simple. Simply give us 3% of the 3% of your gross sales. And it's done on quarterly basis. We don't expect you to keep elaborate records. So it's as simple as that. Just give us 3% of the income you have earned. And it's on quarterly basis.
I like
so that perception that Juakari really should not pay tax is actually wrong. And we have actually observed that sometimes the Jua is not so carry. Actually, some are beyond the turnover tax.
The Jua is not so carry.
So we have seen, and we have some of the records. Because we interrogate this data.
So you have a lot of individuals pretending to be suffering,
to be under these very hot
and living below $1 a day story, but they genuinely are doing very well, even if they are in the
well,
But I mean, there's millions going through.
So I think we leave it to the individuals just to be honest enough and pay your taxes. Put yourself where you belong. So this is for the lowest, and it's for people who are earning below 5 million. You see, that is quite low in a year. Of course, they are there, and that's why that tax is.
Of course, you can read more about that particular bracket from the KRA website. Just as a recap before we invite Steve and Raila on set, was also the side hustle. This was a very, very, very huge area of interest. Did you know that even if you do have a side hustle, you are required to pay taxes on that? And why don't you give us the example you used last week, Judith, and you can also contribute to this about how even if I'm working here, you can see me here at Y254. But Judith cracked me up last week. She said, we don't know what you do before 8 and we don't know what you do after 5. So if I'm doing makeup, for example, you know, after 5 p.m., you expect me to actually declare that I'm doing a side hustle.
Yes, we said that because even as we are talking, we said there could be side hustle happening. That is anything that is giving you some extra
money,
coin, and that to us is extra income, which should be added up to your employment income. Side hustle may come clear for those who are in employment, and you say, all my tax has been deducted and paid by my employer. Why should I file a return and declare? So we say, no, your employer doesn't know much. He only knows what he pays you. I could bring another example where I'm a teacher after 5. I'm a lecturer after 5.
Oh yes, very common, yes.
Yeah, it's very common. And that is even maybe not a very good example, because if in that case my tax will be withheld the other end. But the question would be at what rate? It will be withheld at 30% because the part-time employer doesn't know my bracket, my buds, where I am with my first employer. So that's why we impose 30% withholding tax on part-time jobs. But I had given an example of
a photographer.
Maybe a photographer. Like the crew here after this, and maybe over the weekend they're doing weddings.
I don't know. Our cameramen actually photographers. We need to ask that question.
They could be somewhere out there. So what we are saying is anything that you do, some could be hobbies that give you money. So that's the money we are talking about. That's an additional income that needs to be added to the employment income.
Yvonne, it sounds like KRA has a lot of work in terms of cracking down and trying to understand the individuals and whether they are being genuine about declaring what they have on the side. So you've got a lot of cases like this, eh?
What I would say is our tax regime is based on the self-assessment. So it's virtually the taxpayer to declare what they earn. And if you're not declaring what you are earning, then when KRA catches up with you, you will know the consequences at that point. But it's basically, the regime is a self-assessment regime. And as my colleague is saying, that if you have a side hustle, I know quite a number of young people transcribe. Someone can be in the office during the day, but at night they're busy on the other hustle. So it's upon you to declare that.
And be compliant.
When it is due.
All right, I'm going to ask my director to actually pull up a document that Yvonne and Judith actually prepared for us concerning salary brackets and how taxation actually follows through. We talked a little bit about that, but I like the fact that now we've got visuals. Is my director ready with that? We can get into that in just a minute. But even as he's preparing, Yvonne, let's talk a little bit about the arts. This is a youth channel. Of course, this is a very key area of interest, the arts, music. You've got, of course, people who are in design and what have you. Where do these individuals actually fall? Because someone who's probably a rapper, a musician, a music producer, or what have you, cannot imagine that, by the way, even that performance that I'm actually going to do is going to be taxed.
Depending on their turnover, as we have previously said, depending on the turnover. So if they get, the turnover is the total earnings for the year. So if the turnover is below 5 million, then they fall within the bracket of turnover tax. And then they're supposed to be declaring that and paying that on a quarterly basis. And it's 3% of the turnover. So it doesn't mean that because they feel that their side hustle or their hustle is so little, they're accommodated in the tax system under the turnover tax.
And I feel, anyway, I guess it's personal responsibility at the end of the day. You've got to decide whether you actually want to see Kenya moving forward and how can you actually contribute, and you do that by paying your taxes. So my director tells me that the document that you prepared for us is ready, just to give a glimpse about how much one would actually earn. Because Judith, I think when you came on set, a lot of people myself included, can find this very difficult because you don't know if I'm earning this much, how much should be deducted.
Okay.
And you know, after that, we're even going to talk about one of the common cases of whereby companies, employers are not actually remitting and are not declaring, and what can one do about that. But let's take a look. Director, please throw that up for us, Martin. Okay, I don't know if you can actually enlarge in that so that audiences can see that, those at home. Okay, all right, so we're going to focus on 2017.
Yeah.
Okay. All right, you want to take a look at from your phone? Okay. So in this particular example, last week, Judith, we talked about an individual called Anne, for example.
Yeah.
How she was earning what? Was it 30,000?
30,000.
But in this particular example, you've got
We
what?
used 50,000.
50,000.
So that we can see it go all the way down.
Yes.
To the final bud.
Yes.
Yeah.
Okay. All right. I'm gonna pass this to you, Yvonne. Okay. So you can actually read 2017.
Okay.
Okay. All right.
So we are working with
2017.
We are working with a taxable pay of 50,000,
Okay.
and in 50,000, this example assumes that 50,000 takes care of basic pay, all the allowances, because all those are taxable.
Yes.
Yes. So the taxable pay is 50,000, and then in the event that somebody is purchasing a house through the mortgage system, then the interest paid on mortgage is exempt from tax up to a maximum of 25,000 shillings.
Yeah.
So if you're earning mortgage, then you'll reduce that from your gross pay or taxable pay. And then if you're contributing towards a scheme called housing ownership plan,
Yes.
a maximum of 4,000 is also exempted from tax. If you have a pension, a maximum of 20,000 is exempt from tax.
Okay.
So for this case, we assume this Anne does not have these three deductions.
Yes.
So
in
they're
fact,
taxable.
most people don't even have those three deductions.
Yes, we will assume they don't
And
have.
they are meant to encourage
Yes.
savings. Yeah.
Yeah. So so Anne's taxable pay is 50,000.
Yeah.
So the first 11,180 will be taxed at 10%.
Okay.
And our taxation system is the graduated scale, so that amount A is taxed at 10%, and then the tax rate goes increasing with it increases by how much you earn, so that the people earning more are taxed more than those earning a little less.
Yeah. Okay.
So 11,180 is at 10%, giving us 1,118. And then the next, if someone now earns above 11,180, the next what is over and above 11,180 will be taxed at 15%.
Yes.
But it will be capped at 10,534.
Yes.
So the next 10,534 is taxed at 15%.
Yes.
That's giving us 1,580.
Okay.
And so on. And the next band is 10,534 at 20%. Then the next 10,534 to give us 25%. And then from Anne's salary, if you add up the first 4 bands, you'll get a difference of 7,218 to give you 50,000.
All right.
So that the 7,000 is taxed at 30%.
Okay. Director, can we have that image again on the screen, kindly? So that we can follow what you just said. Okay. All right.
And so once we have established your tax, in this case, Anne's tax is 9,602 shillings. Then we give Anne, the law stipulates a personal relief of 1,280.
Yes.
And then if Anne is having an insurance policy, she has either taken a policy to insure her life or that of her spouse or that of her children, or she has taken a policy to, like an education cover. that has a maturity period of at least 10 years, then Anne will get a relief.
Okay, okay.
And that relief is subject to a maximum of 60,000 in a year.
Right.
So at this point, if Anne has an insurance relief, we also give a relief on amount X, and then we will get the net amount of pay as you earn to be deducted by the employer.
All right.
Or by themselves.
Okay. So in the event that maybe this has just gone through 1 year and come out to the next, what is the easiest way for one to actually understand filing their returns? Because that was a very common question that we received from our feedback.
Okay.
Yeah.
First of all, I'm actually happy that young people are taking the initiative to understand not just what goes out, but how it comes out. First of all, there is a pay-as-you-earn guide on our website, and it has quite a few examples.
Right.
Hopefully, it's easy to follow. So there's a pay-as-you-earn guide on the KRA website.
Yes.
And for those who really feel that this is just too complex.
It's too much. Yes, she got me one of them. But hey, don't look at me just sitting here thinking that I understand everything.
That's the reason why we have iTax, and we are saying it is simple, it's secure. When you put in your figures in iTax, it calculates for you.
Okay, so there is no excuse here. Okay, fine. All right, real quick, what do we do in a situation whereby I discover that my employer is not actually declaring or remitting, and KRA is after me, yet I thought these deductions have already been done? Judith, what happens to me?
Okay, now why it looks like KRA is after the youth, but usually what the iTax system does, it reconciles. If the youth has declared and the youth is actually not paying us, like for what we have found out from Anne, the 9,000, because the 9,000 is already paid by the employer. We want to see whether the employer paid. So if we find that the employer did not pay, then we put a default note, defaulter's note on Anne. We are telling her, yes, you have filed your return, but you owe KRA. So she's the one to go to the employer and say, KRA says, I did not pay. But on the other end, we'll also be following up the employer. Because we can see clearly he actually deducted, but did not remit. And it is the employer actually who carries the penalty and the interest.
And the cross. And I like that. All right, so we're going to take a short break. Let me just ask my director to give us at least a minute or two so we can invite Steve Ayaka and Raila Opanyi, who are both students from UON and MKU respectively, so they can actually throw their questions in the next 10 minutes to both Yvonne Tago and Judith Njagi.